I've never heard about you and I'm a bit grumpy, then you might say, well, I won't charge any management fee. That's my competitive edge.
If you do not want to stand there and watch other people get rich, you must learn about venture capital. This is for you who wants to work in venture capital, maybe seeking an investment or want to become a brilliant investor. In this masterclass about venture capital, we're going to present everything you need to know about venture capital, and maybe you learn something that could depend on your financial future and you can become rich. So, welcome to the Venture Capital Masterclass. And have you ever wondered how the money are managed in a venture capital fund? Today we're going to talk about two key terms when it comes to venture capital, which is the committed capital and capital call.
Yep.
And as always, we have Kat here, the
Hello.
business lawyer, to explain everything to us. And we are also powered by the LE Fitness today. We are very happy about that.
Indeed.
So let's start. The two key terms.
Okay, so let's start with capital, committed capital.
Yes.
Yeah. So when you close, because we talked about that in the first episode, that a fund, a VC fund, does not live forever. It has a lifespan of 5 or 10 or 12 years, somewhere in between. So when you close a fund, that means that the VC partners has fundraised and raised the size of the fund. But when you close the fund, let's say you, Ida, you have Stellar Fund number 3 that you're fundraising. Yeah. So you close it with a committed capital of $500 million US. That does not mean that your fund has $500 million US in the bank.
Okay.
Committed capital only means that you can call on it from your investors, the LPs.
Oh.
So it's a legally binding. If I'm one of your investors, I have committed 100 million of those 500 million, then that is committed. That's a promise that when you call upon it, I will send it to you within perhaps 10 business days or even 15 sometimes. But it's a short period I have. So it's very heavy penalties if I would not send the money. So the money always comes through, I would say.
That was my question. So you're committed to this money?
Yeah, absolutely. Okay. The money comes through. So when will you call on it? You will call on it, do a drawdown, it's also called, when you have found that startup worth investing in, or when you want your management fee.
Which is?
A yearly, typically 2% fee. The other one is the carry, and we'll have a specific episode about the waterfall and the carry where we'll walk you through it in detail. But for now, you can have heard the 2-20 model, where 2% yearly management fee and 20% will only be a profit sharing if the fund goes well.
Okay, but these 2% the investors are paying?
Yeah.
Okay.
Yes. And of course, if you're a challenger, this was your Stellar Fund number 1, I've never heard about you and I'm a bit grumpy, then you might say, well, I won't charge any management fee. That's my competitive edge. I will only charge the profit, or I will only charge 0.5% management fee. Or it will taper off. It will be 2% the first 2 years when I have a lot of costs and due diligence looking at the companies, and then it will taper off. But typically it's 2% management. But going back to the terms of today's episode, committed capital, the promise. And capital calls, that's when you call on the money. And then we have deployed capital. That is the capital that you have called on, and that is invested, put to work, or used
like
for the
already
management.
used. Okay.
Yeah, exactly. And in the masterclass number 2, we talked about dry powder. So if we have 500 in committed capital, and you called on 200 and used those for startups, then we have 300 in committed capital, not yet called on, not yet deployed, put to work. That means that we have a dry powder of 300. So for any of you founders looking for a VC investment, it's key for you to understand how big is the fund, how much capital do they have committed, and how much is already deployed, which means it's not available for you. And also for you breaking into venture capitalism, you will want to understand this because this is also strategic. Because if you want to do follow-on investments, do you have committed capital not yet used, etc.
So
that's it.
That's it. It's
That's
really
it.
good to know because, I mean, these words, you hear about them all the time. And now you know. So if you want to get into venture capital, you need these two key terms.
And when we get back to the waterfall, we will also tell you about recycling of already committed capital. But that's for another. We're going deeper and deeper.
We're going down. It's so fun to share this.
Yeah.
So if you want to get into venture capital, you now have 2 more tools in your toolbox. And we're so happy to share this with you.
Fantastic.
So stay tuned and follow up for the next venture capital masterclasses.
Hej då!
Hej då!